What is up everybody, welcome back to another late night stock market video, and today I'm going to be talking about these stocks that I bought in February 2025. So just going over the agenda, these are the stocks that I bought for this month. Also remember that I'm doing this to my own specific plan and my own strategy. I have many portfolios and this is only one part of it. Don't forget to make sure that you do your own DD and invest for yourself. Do not follow other people's recommendations blindly, and you got to be able to do that research for yourself and have your own conviction. And if you are new to investing, I highly recommend you invest in something like a world diversified index fund like VT. With that said, don't forget to hit like on the video and subscribe, otherwise let's have a look into it. So you may want to pause the video here just to show you kind of the simple rules that I have myself. I have a modified one, but this is just something to show you of what you should be looking out for when you are investing in individual stocks, which I have been. A couple of the beginning ones is index funds and whatnot, but if you're investing in individual stocks, you need to have some sort of game plan, and this is just something for you to have a look at. But anyway, what I've circled there, don't worry about that, that's just a screenshot that I've taken. So the first stock that we have here is in my invest now, and that's the Foundations Total World. So this isn't a ticker symbol because it's not like Sharesies, it's a whole different setup. But basically what you can see is that I bought the funds. So over here I bought $248 worth, and also a big purchase here which was $2,000. And these screenshots here is from Invest Now. After buying that, you can see the fund is called Foundation Series Total World. That's the amount of quantity, that's the unit price, and that's the New Zealand price right there. And in this portfolio, it is now up to 7,400, and I'm going to be putting a bit more money into this one here because these are PI funds. And if you watched another video of mine, PI funds are the ones where it pays the fifth tax for you, because I am starting to get close to that 50,000 New Zealand dollars invested. And in my tax video, I showed why I'm doing this. So some people don't actually know that Invest Now is a cheaper platform and it has less fees than Sharesies. I like Sharesies because it's really easy to use and really beginner friendly, but Invest Now is actually where you want your money if you want to buy just index funds, not individual stocks, and keep adding to it weekly, a decent amount of money. So we have here that you can do weekly payments, but also if you do a minimum buy, what you have to do is they have to be at least $250 per buy. So I use this platform for funds investing, and these are the pies so that the tax is taken care for me. And the one that I'm showing you here is the one that I bought $2,200 of, which is the Foundation Series, and you can see that it's not here, but you can see that for a whole year the return was actually 31.7. That's quite, that's not really normal. You're expecting to do about 8 to 10% per year, so that's an outstanding year. Unfortunately, I didn't capture much of that because I've only started investing in them soon. And this here is how you'd invest in this platform, but this is not the video for that. So you just click that there, and that's how you do your buys. So moving on to the next stock that I did buy, which was on the Hatch platform, and I bought 4,000 New Zealand dollars of that. So a pretty decent buy here. And the reason why I bought this is because I have extra money from my Tesla shares, and also I think the market is overvalued, and I'm looking for more safer picks. And these ones here. So we can see proof on this side here that I bought this on 11th of February, and I bought 6 shares at $381 US. And here is just a snapshot of that buy and what it's currently up by. Now this is a little, this is a week old now, so yeah, it's a little bit different now. So what is the stock? It's actually ticker symbol VOOG, which is the Vanguard Growth ETF. So reading here, it invests in stocks in the Standard & Poor's 500 growths, composite of the growth companies in the S&P 500. So this here is a snapshot of what is in the funds and each of its categories. So pretty diversified. And going further in, basically you can see here that it is the top market cap companies, and it's got a big holding in Nvidia. And right now I do think the market is very expensive. I do have a couple of stocks that I play in, and I've had money for them, but I'm not really sure. I don't want to put too much money into them because I already have in some positions. One of them I'll go over shortly with you, and yeah, I just don't really know. So I'm just investing in the broader market, and if it goes up, then that's good. It's just going to go up slowly. I'm okay with that risk. And if it goes down 5, 10, 20%, then I've got more money on the sideline to buy. But right now, there's not too many outstanding picks. All these big caps here, I feel, they're quite expensive already, apart from maybe Google or something where I buy a little bit of that. But everything else, definitely, I think Tesla is still a little bit expensive at around about $350 per share. The other ones, you know, it's not too much. Even Nvidia, I think, has run up quite a lot. So just buying the S&P 500, nothing wrong with that. I can put my money in there and it's going to be doing better than the bank term deposits. So the third stock that I do have is in my Sharesies, which is Celsius, ticker symbol CELH. And this screenshot here was before the earnings that they just did. And in fact, coming into the future, I can tell you now that the earnings was very good. It actually ended up going up to $35 a share. But from here, a couple of weeks ago, well, in February 14th, we can see that it was $22.34. And the PE ratio was 31, and also the forward PE ratio was pretty good. It's at 27 now. And you can see from the chart that Celsius have been having a bad time. It has been declining significantly, and I think right now was a good opportunity to buy these shares before going into earnings, but I have been accumulating because I do want to hold a decent position long term because I do believe in this company. So in my Sharesies account, I am changing some of the dividend stocks. I don't want to be fully dividend investing anymore, so I am going to be getting rid of these stocks here in there, and then I am buying some growth stocks. So one of them is going to be Celsius, and so just starting off really small, and also SoundHound. And while I only have a small amount of shares here, so 8 of them, in my other account I have over 200 shares of Celsius. So a quick look at why I think Celsius has some value in it. So this metric here is what I look for, which is total enterprise value to the revenue. And we can see it was very high, sort of the 2019, so 30 times. And what I'm looking for is a lower multiple to buy in. And we can see in the last 5 years, apart from its beginning stages here, that we are getting a decent low multiple in Celsius right here. So they are growing their revenue compared to their enterprise value. Enterprise value is how you would say how much people think the stock, or you know, how much the company is worth. So what does this mean for me? Well, it just means that right now at a lower multiple, I think this is a good chance that we are getting a deal here if Celsius does continue to grow its revenues. And looking at the old earnings slide here, we can see that in the up arrow that Celsius has been growing their retail sales across the track channels, so that's always good. It means it's a growing market. We can see here they're doing the same thing as well, the contributions to the categories. So all good signs that Celsius will continue to keep growing and keep getting market share hopefully in the future. The big one that I also want to count in for 2025 is that the global expansion that they've been going, so that has started and that should be ramping up definitely inside 2025. So the big ones that I'm looking for is the 3 main countries that we have here, which is Canada, United Kingdom, and Australia, and that's purely because of population. So therefore, if the drink is very popular, they're going to be keep buying a lot of it, and hopefully that will boost the sales of the American market as well. We do have New Zealand, which is where I come from. I don't think we're going to be quite significant that we're going to add to that, but you know, I drink the drink, so I think some other people will too, and that will then add to the revenues of the company. And still looking at the Q3 earnings that they have, we can see the consolidated revenue here, but basically the Pepsi sales, they've been on hold or buying a lot less of them, and we can see the significant drop in the quarterly revenues, which is happening. But while this has been dropping, it hasn't actually been too bad, considering that Pepsi is quite a decent chunk of them. They're about, I think, 40 to 45% of their revenue from that one customer. So it shows here that, well, in my opinion, it shows that I don't think it's a significant drop, and it means that the other customers are bringing them up a little bit. You can tell that it is quite big, and that's just what happens when you have a big customer. But it's better to have a big customer than to lose them completely. So when they start buying again, I think we're going to see a decent uptick in this line here. But moving on to my fourth stock, which is a little bit of a risky one. Well, it's quite risky. Even I don't know too much about it myself, but it is ticker symbol SOUN, which is SoundHound AI. And we can see here that SoundHound is at $10.97 in February 14th, and that the PE ratio is actually NA because it is a negative earnings company. And just from what I said, it is a new stock, and therefore it is very high risk. And going back to this, I've purchased some shares in my SoundHound, but I've also got some of these in my other brokerage as well to replace some of these old dividend stocks that I keep. So why have I started buying SoundHound? And that is because this report here, so SoundHound AI reports record third quarter revenues up 89%, exceeding 25 million, raises outlook. So it's a $4 billion market cap company, so fairly small, although I think it is quite overvalued at the moment. they did have a massive boost up. They're only about $2 when I started looking into them, and then they rose sharply because of Nvidia. But now looking at them, actually they came back down again. So yeah, reading here, reported revenue was 25.1 million, an increase of 89%. So it shows it really high growth there for the company. And then at the bottom here, the GAAP earnings per share was a loss, so that's why they are negative PE. They are actually losing money. Not enough revenue and earnings are kept in there to pay everything out, so that is the big risk there. But the non-GAAP per earnings per share was a loss of just 0.4 cents. So if they continue to keep growing like this, they will eventually have a positive PE. So the company is trying to grow more, so they're putting a lot of money into growth, spending a lot more to try to acquire these customers.
This is dynamic interaction from SoundHound. That means natural language understanding that happens as fast as you speak. The system is already listening. Watch the cart update in real time as we order. Can I get a pulled pork burger with a deli bun and mustard and pickles? I'd also like a kid's mac and cheese with milk and yogurt and a large Coke and French fries. We can edit the cart with voice. Make the Coke a small, I don't want the French fries, and change that to apple juice for the kids' mac and cheese. Notice how with dynamic interaction, we also get real-time suggestions triggered by what you say as fast as you need them. Clear cart. Classic cheeseburger, Swiss cheese, avocado, lettuce, and no mayo. And the suggestions pop up right when we need them. With a deli bun. On the side I'll have mozzarella sticks and to drink a vanilla milk. Start over. Pulled pork burger, lettuce wrapped, brownie, onion rings, spring water, vanilla cupcake, delete the first item, French fries, get rid of the spring water, strawberry milkshake, scratch with a double patty on a pretzel roll. This is amazing.
As you saw there, that was a demo video of SoundHound many years ago, and I thought that was very impressive. So now that is why I am buying into them. Just buying a small amount on my Sharesies just to check them out as I do a bit more DD. But right here, I went into Simply Wall Street, just my initial analysis. This is a good site for learning in there. I have my other videos that show how to kind of use Simply Wall Street, but yeah. So over here we can see the little wheel that they have, and it's showing that it is red and very thin. So it shows you that this is a very highly risky company. And here are some flags. Here we can see shareholders have been substantially diluted in the past year. It's highly volatile share price over the last 3 months because it does go up and down, and also significant inside selling over the last 3 months. So yeah, and it's currently unprofitable and not forecast to become profitable over the next 3 years. But again, with that growth, I think this here might be able to change in the next year or two. So the big takeaway from this here is that SoundHound, its revenue is 67, and also the earnings is at minus 111 million. So what does this mean? Well, the analyst projections, so this is here, and the analyst projections is here. So they're expecting the growth to be quite significant from how the company has been tracking, and this might be why it's, you know, it's got a decent valuation on it, because a 4 billion market cap is a lot of money for this company that still isn't even profitable yet. So people are expecting big things from them, and that's why I'm just going to slowly accumulate, because I think this stock could still drop further to allow me some buying opportunities. But there is a lot of opportunity here as well as risks, obviously. And here is another snippet from another stock market website. So SoundHound AI updates revenue guidance for the years of 2024 and 2025. So this is good signs that they are growing their revenue, and hopefully the earnings will follow. So SoundHound updated its revenue guidance for 2024, 2025. The company expects its full 2024 revenue to be in the range of 82 million to 85 million, which is really good. And then the 2025, so this year, the outlook is hoping to be 155 million to 175 million. And this is quite significant jump. So you just imagine your own salary, and the next year you're going to be almost doubling that. So that's a big change, right? So if you're working and you're expecting to double your salary, well, that's just incredible. So this is essentially what this company is doing, that they've got big plans, and this is why people are investing, because while you're investing at $4 billion market cap, if they do crank up their revenue, well, that's basically half. So you'd be kind of getting this company at 2 billion market cap type thing if this continues. And then what happens is next year after that, they could double again. I don't think they will, but if they're guiding for this and management think they can do this, then the growth is going to be massive. And after that growth, the share price is just going to absolutely crank if they keep growing at these levels. So anyway, it's pretty late here, so I better finish this video. It's getting on a bit. My weekly buys in Sharesies as well, as I have $100, and that's just into funds, so that just shows you what I've been buying here every week. So the key takeaway is that I've sent over 6,000 New Zealand dollars in funds and have started buying positions in these other ones in my Sharesies brokerage. Again, I have bought bigger portions of it in my other accounts as well, but I'll go over them in another video. So in summary, general stock market I believe is overvalued, but I am still buying while increasing my sideline cash. As you can see there, I've got over $10,000 in my sideline cash in case anything happens or we get some big fear or drops in the market. But I want to make sure they are decent discounts to buy, because I already buy $100 worth of shares in Sharesies every week. If you are interested in my total stock market video, which is over 140,000 New Zealand dollars, feel free to click the end video, which I'll pop up. If you have any questions, feel free to comment them down below and I'll get back to you when I can. Feel free to use my referral codes there, that will help me out and the channel. If you want to follow me elsewhere, I'm over at Instagram. I share my stock market news and what I'm doing in the market every other day, so go over there and follow me. The trading platform I use is Interactive Brokers, Hatch Invest, Stake and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Don't forget to hit like on this video and also subscribe if you're interested in this kind of thing. I don't get paid by YouTube, so the likes are really good as a form of payment. Anyway, thank you for watching and I will see you in the next one. Goodbye.